Welcome. Just a quick introduction for our next speaker. Juliana Scheidhauer is a founder and CEO of Reimagine Resources, a privately held global startup in St. Louis. She started Reimagine Resources in 2021 as a fitness equipment business out of her apartment, but soon upgraded to her parents' and grandmother's garages, porches, and basements. She currently has an amazing team of 3 people, numerous partners throughout the greater St. Louis region, and about 5,000 square feet of warehouse space in Fenton. Reimagine Resources connects businesses and individuals to a fit and healthy lifestyle through end-to-end fitness resource solutions. They help people find the best equipment needed for their goals, create and optimize space, sell, deliver, install, and service equipment, maintain gym space, and connect people to local trainers, and recycle and donate the equipment at the end of its use. Reimagine Resources is a marketplace vendor on Walmart, Amazon, and fitness repair parts. Reimagine Resources is working with the Missouri Department of Economic Development for expansion plans to Canada and beyond. The company's mission is to make the world a better place by making a positive impact in the lives of people globally through fun and fitness. Reimagine Resources helps you reimagine you. Juliana holds a bachelor's degree in business with a focus in finance and an executive master's of international business from St. Louis University. She was recently named 10 under 25 for innovators in the St. Louis Business Journal and is actively engaged with the St. Louis ecosystem. Juliana enjoys spending time with friends, family outside of the business, exploring new places and trying new things. She has a black belt in combat martial arts and enjoys volunteering as a self-defense instructor for a local nonprofit. She also enjoys outdoor sports and riding her motorcycle. And with that, I will turn it over now.
Thank you. Hey, thank you everyone for coming out. Welcome to my talk on building with a global mindset. What does it mean to have a global mindset? Why is international business important to your business and what you do? And how do you build with a global mindset? Those are some of the questions that we'll be addressing in today's presentation. In an interconnected and complex world, understanding the dynamics of international business and its impact is important for everyone's lives, especially those with a business. But it doesn't matter, regardless of the industry or the scale of the company. It's really important to everybody because it's impacted. So understanding the dynamics of it and the broader economy will help your business navigate a VUCA environment. VUCA stands for volatility, uncertainty, complexity, and ambiguity. The world is interconnected and ever-changing, impacting enterprises and really beyond that as well. So we saw this as we experienced the pandemic. We saw that everything kind of changed during the pandemic, and then we also saw that again during the Russia and Ukraine conflict. So the companies that outperform their peers during VUCA environments are generally proactive, and they are able to be agile and quick to maneuver as they recognize the sensitivity and complexity of the global economy. So we'll dive into how international business impacts companies, the basics of international business, and practical steps that you can implement as you're thinking about, for the future, possibly going international with your company or a startup. So I'll be sharing about my experience as I'm trying to become international business as well. So we're working with a couple different partners in St. Louis. We'll give you some tips and resources for that at the end, as well as some of the educational background that I got from St. Louis University. I'll be covering 3 main points. That'll be the mindset, the mission, and the method. So first we'll talk about what is international business, kind of the basics of it, the framework. Then we'll talk about the mission and why is it important, what is the impact of it for you and your company. And then lastly, practical steps that you can take to think and have a bigger and global mindset. So before we do that, I want to do a quick quiz on your understanding maybe or ability to know about the international markets. So the first question is, blank percentage of goods are shipped by ocean freights. A is 60%, B 70%, C 80%, or D 90%. What do you think? You think C? Anybody else have any guesses? C? Okay, so it's actually 90% of the world's goods are transported through freight ocean. So the next one is the top 10 US importers. First one is Walmart. We'll guess the second one here. The third one, Home Depot, Lowe's, Ashley Furniture Store, Dole's Food, Samsung America, Dollar Tree, and Chiquita Brands International LG Group. So what would be the second one, do you think? We have Amazon, Best Buy, Target, and Walgreens Boot Alliance. That's Walgreens. Amazon? This one surprised me. It's actually Target. Amazon isn't on this one at all. So I think potentially it's because of the third parties that are on there versus them directly importing the goods because they're more of like a software service. Anyway, so yeah, Target's the second one after Walmart. The third question is the average cost of to ship a 40-foot shipping container peaked last year just over blank amount in September 2021. Before the pandemic, the same container cost just $1,300. We have 9,000, 11,000, 13,000, and 15,000. 13,000? Okay, so the answer is 11,000. So that was a good answer, but regardless, all of these are just super high, right? Compared to what they were at 13,000. This is why it's impacted the prices of goods and inflation and what you're buying at the end of the day. So yeah, it was very surprising to me when I even heard it was 11,000. Our next question is, on March 2021, the Ever Given container ship blocked by the Suez Canal for 6 days held up to blank amount in commerce each day that it was stuck. So if you remember what was going on, a couple months, last year, this had a big impact. And so we have A at just under a million, or under 1 billion. We have B at 3.8 billion, C at 5.1, and D at 9.6. C? You say B? Okay, it is D. Yeah, $9 billion, almost $10 billion. So when things are stuck, as we saw during the pandemic, it really impacts everything, and it costs a lot of money. So that's part of why it's so important to understand about the economics of international business, because it affects everybody's lives. The largest export from Missouri in 2020. So I thought this was an interesting one. We have A, motor vehicles for goods transport, B, civilian aircraft engines and parts, C, medications and measured doses, meat, bovine animals, frozen fish, or frozen, fresh, and chilled. What do you say? D? Okay, so it was actually A. So motor vehicles. I thought that was interesting. Because I guess I know some companies that are, but not too many, I guess. Okay, so that was a good job. Good. Just a little fun facts to learn about international business and kind of the scope of that. So I'm not sure if you're like me, but I definitely have a lot of American in me, and I have the tendency of the Icarus effect, where if a little is good, then a lot is a lot better, right? And so not only have I been fascinated by international business because I'm from China, but also because business has the capacity for influencing people's lives, and from its employees, its vendors, partners, and its customers. And as you already probably know, life's not fair and it's not always easy, but I'm so grateful for the opportunities and relationships and the healing and growth. So part of my life's mission is to make the world a better place by being a good steward of all that I'm trusted with. So back in 2020, during the pandemic, I pivoted from some medical challenges and a startup that was ending during COVID, but was trying to figure out what I was going to do with my life. And then at that point, I had some professional experience in nonprofit, a little bit in business, and education and finance. And so I was trying to strategize what I wanted to do as I wanted to have an international impact. I knew that a lot of times founders and startups they have a lot of capacity and a lot of vision, and they can do a lot of things, but a lot of times they don't have the skills maybe for international growth and to build something that's a little bit more robust for the international market. And a mentor once told me 2 things that you should invest in: education and experience. And so with that information, I continued to do some research and decided to go back to school at SLU to get my master's in international business. I felt like it was a good fit because they were one of the best in its industry. And then I also continued with going into my own business and building experience from that. So on the first day of class, we had like this introduction into international business, and we did, our introductions. People talked about, what they did and why they were at this program. A lot of them would say they were there because they had technical backgrounds, and then they wanted to, go up into upper management into this international company. And then there was me. I was an entrepreneur who was, having a business that was kind of like dying off because of COVID. And I, had this side gig of selling workout equipment out of my parents' garage. And I'm like, this is not going to be a business. Maybe something else will, but this is not going to be a business. It's not sexy to sell used equipment. It's not as cool as tech or, professional services. But I introduced myself and I said I wanted to one day, have an international business. And I wanted to, have an impact on the community. So then after that, they kind of went into international business in the introduction. And some of the following facts is what we kind of started with. So the next thing I learned about is, sorry, I missed some slides there. Next thing that I learned about is the law of diminishing effects. So sometimes the bigger that your company gets, the lower the return on investment or return on assets. And so this quote is from the Harvard Business Review, and as well as this graphic here. So staying local, actually, in general, you have higher percentage of ROA. And going global, a lot of times, you're actually losing for the first 5 years. So companies selling abroad had an average return on assets of -1 as long as 5 years after they moved. It takes 10 years to reach a -1%. And only 40% of companies turn in more than 3%. In comparison, companies instead that expanded domestically actually saw an increase of 1% after 5 years, and 2.4% after 10 years, and 53% exceeding 3%. Then we went into other case studies about all the businesses and huge companies that failed, including Walmart and Target and eBay and Google and Airbnb. So at this point, we also have globalization that threatens national sovereignty because you're having to work with other countries and you're not in control of all of your trade there. As well as it increases environmental stress because you're consuming a lot more when you're in the transportation logistics there. And then lastly, growing income inequality, and personal stress. So at that point, I was like, I think I just made a very expensive mistake in my decision to go back to school. I just need to rethink about my life's mission because I want to have international impact. And apparently, according to these statistics, there's a lot of negative sides of this. Even though we went on to talk about the benefits of international business and kind of how it's impacted the world and how to always be with us, it still was, it made me think because I thought, as a business, you start small and then you become an international business. Of course, that's the logical progression for where you want to go. But this made me think about why you want to go international and having a purpose of going international, not to go international just for the sake of going international. And then it also taught me where you should go to international. So just because you can go to international doesn't mean you should. And then you got to pick where is the strategically best place for your company or just for your position of where your home-based domestic company is in. For example, if you're a US company, maybe you need to think twice about maybe going to a place like China because the China and US conflict or tensions. So you just need to think about what you're doing and like what kind of goods or services that you provide and who your audience is. So next we'll talk about the mindset. So mindset of international business and like what is international business and like what does it mean to have a globalized mindset. So I think this one is simply just put all commercial transactions, including sales, investments, transportation that takes place between two or more countries. So in a way it's simple, but in another way it's also complex, because simply if you sell a good online through like Walmart or Amazon, right, you're also international at that point. If you're doing maybe, I don't know, like graphic design or artwork internationally, like across borders in Canada, I mean, then you're an international company, right, as a startup company. So in some ways it's easy, right, to become international, easier with the internet. But in another way, it's actually pretty difficult because there's a lot of nuances to, even if you get that initial, like, I'm international, but then you have to sustain it, right? So that's the part that makes it difficult and complex and a little bit more, more specific in what you're doing. So some of the basics about international business is you want to look at the environments, the culture of where you're going or where you would like to go, the trade and investment, the financial aspects of things that it has to do with maybe the currency exchange. So in Europe, the currency exchange is actually really good right now for Americans because the currency is really low in Europe right now, which is really bad for them. But that means we have a higher purchasing power. If you're talking about Brazil, they also have really bad currency exchange right now too. So I think last time I was in Brazil was like 5 to 1. So like $1 here in the US dollars is 5 of theirs reals. And so we're able to purchase more with that. Then we also have like the global strategy, the structure, the implementation. Again, that has to do a little bit with culture, the laws that go into there, and then managing internal or international operations. So that also has to do with the legal side of things. So having a global mindset also means having cultural intelligence. So there's 4 main aspects of cultural intelligence. We have motivation, so kind of someone's desire to learn about other cultures and to be able to confidently interact with ambiguity and being able to, even if you don't know about it, just like the motivation to learn and to be curious. The second one is knowledge, and that has to do with recognizing like that there's differences and like just differences in history, society, just really the culture aspect of things. And then next we have strategy, so making sense of that. So making sense of what you know, like from your own country, what you know about their country, and kind of figuring out how you're going to interact. And that leads us to the behavior aspect of it. Like how are you gonna then act in front of them? How are you gonna, like what is your culture's tendencies and what is theirs, and how do you kind of mitigate that between that? So this here is the culture map. Again, it has to do with your global mindset. Like, so this comes from Aaron Meyer. It's a really good book if you haven't read it. It goes through 8 different types of managing styles for a business. So the low context here, it just talks about kind of the way that you talk about things. So in communication, Americans are a lot more direct about things. If they want you to do something, they're going to tell you exactly what it is. I mean, we use the SMART method that's specific, measurable, action-oriented, reasonable, and timely. But if you see over here, we have more Asian countries, and that has to do with people reading the air, using more communication, things that aren't really said, but they know about. And so they're a little bit more in tune to that, and these aren't like good or bad things, it's just differences in cultures and how they interact and how they communicate. What's also interesting is that in general, countries that are newer, like the US, tend to be a lot more direct in its communication. But like the US, they also have a lot of different cultures, like a melting pot. And so to be able to be efficient or to do things, they have to also be more direct, because there's not time and there's miscommunication when you're not in a culture that you're more familiar with. But in Asian cultures, the history is a lot longer, right? And so they may be able to be more in tune to that cultural aspect of things, because they're also more similar. So the next one is evaluating. So this is how you evaluate feedback. So maybe you're doing a one-on-one or a team meeting and doing evaluations. So the US here is in the middle, and the UK and Canada, as you can see, they're pretty similar there. And then on the other spectrum, we have indirect feedback, which is the more of the Asian cultures, and then we have more negative feedback, which is Germany, Russia, and Israel. So it's pretty interesting there. And then we have, next is persuasion, and this is like, how are you going to persuade another country? So if you're doing negotiations internationally, here are some tips to think about when you're trying to convince somebody internationally about what they want to do and what you want to do. So for us, as you can see, we're like way on the far side there with the application first, versus more of France and Italy and Spain on the other side. So if you're talking about like those countries in France and Spain, they would be more conceptual. They talk more about theories first. As in contrast, the US, we talk about data, right? Facts. We talk about what's worked, what's not worked. We're not talking about like the theories of things as much. We'll maybe eventually get there, but we talk about the facts first. And so those are some key differences. We talk with bullet points. We talk in like very distinct ways, as opposed to in France. And so if you're going over there and you're doing school, they're going to be writing like completely different. They're going to be talking about the theories. They're going to be going back and forth, versus these are the points 1, 2, and 3. Next, we have the leadership. So the leadership style. The leadership style of the US is a little bit more in the middle, but leaning more towards being less hierarchical. So the US, I would say, is again more in the middle. We have a top-down approach, but not indefinitely. And as you can see over there, the Nordic countries are a lot more collective, a lot more social. Like they're a lot more social society, socialism, versus the Chinese society. So if you're talking about culture, you can see the very big difference there. Next, we have deciding. So this is how decisions are made. The Americans are a lot more in the middle again, but more towards the top-down approach. It's actually really interesting to see China top-down approach. So it comes from the leader, and then as you can tell, the president, he sets the mark of what's happening to the country, and it just happens the way that he talks about it. In contrast, we have Japan on the other side. They're a lot more like, we need the input of everybody first. We need to talk about things before we make a decision. So I found that really interesting, because they're both Asian cultures. Next, we have trusting. So this is like the task-based. So we have task-based or relational-based. So a lot of times Americans, again, we're like faster-paced society. We like things done quickly. We're going to go to the task first. We're going to talk about the agenda. We're not going to have too much small talk. You're not always going out with your colleagues, or if you're doing sales, you're not going to dinner with them all the time or drinking. You're going to talk about business, and it's about business, right? It's different in other cultures where sometimes it takes a lot longer. But that's where a lot of other cultures say that the US moves really fast, because we're very task-based, instead of other cultures where maybe they need a couple months to get to know the other person, right? What's also interesting here is that it's a lot more relational based when there's a country that's more developing or emerging, right? So when there's a country that's more developing and emerging, they have to, trust the other person a lot more, versus in a developed country where there's more rules and laws, and that, if something goes wrong, there's a government system that will help correct that. So that's a little bit different there. Next, we have disagreeing. So how this is this has to do with like how are you going to confront somebody on something. So the US is in the middle here. We're a little bit maybe more confrontational than not, but for the most part, we're in the middle. Again, it's not good or bad, but some cultures want to have that argument, and it doesn't affect their relationship. It's more about understanding the other person, debating the sides, getting to the answer quickly, versus being non-confrontational and just being a lot more harmonious, maybe, than other cultures. And we definitely see that with the Asian cultures, China and Japan, being a lot more let's get along, but that's also their culture and their religion, right? Like they're more, like they practice more Confucianism and Buddhism, and they want to be more harmonious versus other cultures. And then lastly, we have scheduling. So this is how they think about time, and this is how they like think about even like the work that they do. So compared to other cultures, like not all languages even have like the sense of timing like we do. We have like the future-oriented, present-oriented, and past kind of speech, compared to other countries that maybe don't even have that at all. So we're skewed more towards a linear like focus, and it's more of like this like step-by-step approach versus like more abstract, more like whenever we get to it, we get to it. But again, here, like, in general, the countries that are more sensitive to time, they're also a lot more developed. The countries that are less developed or emerging, they still are, maybe they don't have the infrastructure, or they don't have the ability to be as precise with their things, so maybe they have crops, or maybe they have something seasonal, which impacts the way that they see time or see things happening, because it's more, it's based on a lot of other factors, and they can't just like stop time and go meet somebody. If they have they have to travel a couple of days somewhere. Okay, so I thought this was very interesting and kind of funny. It talks about like the British and how one culture sees another one. So it's not really is one culture this or that. It's kind of relative to where you're at, right? So in this these examples here, the first one says, with all due respect, this is the British talking. What they mean is, I think you're wrong. And then the Dutch, what they hear is, he is listening to me. So there's just some funny differences here that have some very different implications if you don't understand like where somebody's coming from. The last one I thought was funnier than the second last one. The British is saying, I'm sure it's my fault, or I'm sure it's my fault. What the British are meaning, it's not their fault. And then what the Dutch is thinking is, it's his fault, right? So it's very different. Okay, so here's just some reflection. Like, think about, yes, your culture as the US, but then as an individual, like what is your culture map? Like, even though it may be similar to the US, maybe it's gonna be a little bit different too. I would say I'm pretty close to a lot of what the American stereotypes, thinking is when it comes to the managing style, but there are some differences that I have. And so just understanding that is helpful, like even if you're not working with the international side of things, if you're thinking about just other cultures that are here and just like other families or whatever, you're able to kind of just recognize it, just like personality assessments. The next thing is how do you interact with other people? So again, this is where the US falls over here. And you also see kind of like how we're similar to some countries like Australia here. The UK, we're pretty close to them, but it's not as similar as Australia. But yeah. So this is going to talk a little bit about the culture and kind of understanding the culture and the styles of different countries, and just kind of like what even a large corporation like Walmart kind of did or they overlooked when they went to Germany.
Walmart opened its first store in Germany. German law, these smaller stores offer lower prices than big box stores like Walmart. Soon after arriving in Germany, Walmart faced accusations that it was using short-term predatory pricing to try and put local shopkeepers out of business. Regulators had to order Walmart to raise the price of basics like milk, flour, and butter. After that, their prices were too high in comparison to the competition, like Aldi, which ran small, bare-bones stores. The discount retail sector was a lot larger in Germany than in other countries. It was about 40% of the supermarket business, which meant that groceries and daily goods tended to cost around 15% less than the European average. On top of these financial obstacles, Walmart faced a different kind of problem, a cultural problem. The friendly Walmart practices, based on Southern hospitality, were perceived by many to be fake and at odds with German culture. German media reported that Walmart required its employees to start their shifts by engaging in synchronized calisthenics and group chants of Walmart, Walmart, Walmart. This was intended to build loyalty and morale. Walmart also required its cashiers to flash smiles at patrons, which a lot of customers thought was flirty and creepy. That's also how they felt about Walmart greeters. Pretty creepy. People found these things strange. Germans just don't behave that way. Hans Martin Koschmann, the secretary of the Verdi Union, which represented 5,000 Walmart employees, told the New York Times. Walmart also imposed restrictive measures on their employees, which they called an ethics code. Walmart required its employees to report if coworkers broke any rules, and if they didn't comply, they could be fired. Walmart also prohibited sexual intimacy and flirting between coworkers, according to the Financial Times Deutschland. A German court eventually struck down this ethics code in 2005. By German standards, Walmart is also anti-union. They didn't understand that in Germany, companies and unions are closely connected. They thought we were communists, Koschmann told the Times.
Sounds like employees, associates, they're listened to.
And without going through union politicians.
Of course not.
All unions work at is taking a cut out of my pay.
Unions strongly opposed the working culture in Walmart. Walmart and German unions never established comfortable relations. All of these obstacles combined led to declining sales. Walmart's German stores had a profit margin of 1% compared to their British stores, which had a margin of 6 to 8%. Germany's top 10 chains made up 30% of the market, but Walmart made up just 3% of the market. Full-time staff in Germany demanded a 19% premium compared to UK workers on average, which drove up Walmart's operational costs as their sales declined. So Walmart withdrew from the country in 2006, offloading 85 of its stores to its local rival, Metro. They had employed 11,000 people and generated $2 billion in 2005, but that represented just 4% of Walmart's international operations. It has become increasingly clear that in Germany's business environment, it would be difficult for us to obtain the scale and results we desire. Michael Duke, vice chairman of Walmart stores, told the Times. Walmart's dedication to their company culture ended up dooming them in Germany. The lesson? The locals are always right. Let us know in the comments what companies or company failures you want us to look at next. Like this video, share it with your friends.
Okay, so that was just a video showing like the case study about Walmart and how they really need to think about the culture that they're in, because what's successful in the US doesn't mean it's going to be successful everywhere. The culture of, you know, smiling at people, low prices, that wasn't seen as a good thing in Germany. So the last point here in the global mindset is interconnectivity. What that means is that everything is connected. again, I'm going back to the pandemic because it was so blatantly obvious that like everything was connected and we had so many supply chain issues and logistic issues that as we gain a better understanding of the world, how things work, then we're also able to make a better understanding a roadmap for other things that are happening. We're able to make better decisions about, what's happening, when should I buy this or that, like, for example, when should I buy a car? If you understand about the international market, how things work, maybe you're going to be able to make a better decision on what stocks to buy, when to buy a car, when to buy a house, when to move jobs. That's why it's important to have a greater understanding about the world and how it works. So next we're going to talk about the mission and why is international business important. And kind of we talked about that a little bit in the mindset as well. But so part of the mission again is like interconnectivity, learning that everything is connected and how they fit together. So this one is about trade and basically the dollar, the US dollar, and how that kind of fits into the global economy. It's actually really interesting because the US dollar is so impactful on the global scale, and the US is actually a leader in the international business space. So here we go.
Some 80% of international transactions involve US dollars. What other currencies use both? That gives the US extraordinary power over nearly anyone who imports or exports anything anywhere. Commodities like oil, gold, and coffee are all priced in dollars, regardless of where they come from. But this clout has long frustrated America's rivals, making them vulnerable to US trade sanctions. Here's how the global economy runs on the US dollar, and why some countries are developing alternative systems that could chip away at the dollar's dominance.
The dollar came to dominate trade after World War II. The U.S. was the biggest economy in the world. Other countries were trying to rebuild, and the dollar was stable and plentiful.
In 1944, a conference of 44 nations agreed to peg their currencies to the US dollar, while the dollar itself was pegged to gold. As global trade grew, so did the use of the dollar to conduct the world's business. Even after the United States abandoned the gold standard in 1971, the dollar remained the world's currency of choice.
The world has gotten used to doing business in dollars because it's just easier than doing business in any other currency. The dollar is incredibly liquid, meaning it's easy to buy and sell things all over the world. The U.S. banking system is very efficient, and those things combine to make it cheaper for businesses to buy and sell in dollars.
Here's how a typical international transaction works in US dollars. A Canadian lumber company sells boards to a French home builder. The buyer's bank in France and the seller's bank in Canada settle the payment in dollars via correspondent banks in the United States. These correspondent banks have accounts at the United States Federal Reserve. The money is transferred seamlessly between these banks' Fed accounts because their status as correspondent banks means they are seen as safe counterparties. The United States says the use of these correspondent banks means every transaction technically touches U.S. soil, giving it legal jurisdiction and compelling foreign countries to abide by its laws on money laundering and corruption.
After 9/11, the U.S. used the power of the dollar to advance its foreign policy goals. The idea was to cut out the sources of funding for terror organizations.
The U.S. used its control of the dollar to increase surveillance of global money flows and curb financing toward bad actors. It did this by imposing sanctions on its rivals. Under the system, if a business or country tries to trade with a sanctioned entity in dollars, the U.S. has the power to cut off its access to U.S. currency. But other countries have been building workarounds. Some EU countries oppose the U.S. sanctions against Iran. These sanctions put in place after the U.S. withdrew from the Iranian nuclear deal in 2018 included banning dollar transactions with Iranian banks. As a result, the EU is developing a Eurovac system that is designed to facilitate trade between Europe and Iran without sending money across borders.
The EU countries still in the Iran deal are trying to figure out a way to work around the U.S. system so they can trade with Iran. Now that bothers the U.S., which is trying to exert maximum pressure on the Iranian economy.
India already has an alternative payment system in place that it's using to do business with Iran. According to a Wall Street Journal investigation, it's been used to facilitate transactions US dollar.
The dollar still dominates global trade. You can see that in the standoff between the U.S. and Iraq. Iraq says they want to throw U.S. troops out of the country. The U.S. said, we'll cut you off from your dollars in the U.S. system. But in the future, it's not clear how strong that threat will remain as other countries chip away at the power of the dollar.
If the power of the dollar falls, it could hurt the United States' ability to control the global trading system.
Okay, so that's really interesting, and if it does ever change from the U.S. dollar and from that status quo, that would highly impact your business as a local business or as a startup business, because maybe it's not going to be as strong internationally. Maybe it's going to be positioned in the U.S. as maybe something weaker in terms of trade. So the mission is you want to also wait to go international until you actually have a product or a service. You want to understand your business. So the foundations of your business, you still need to understand before you go international. You have to understand the purpose of what you're doing and why you're doing it too. So some of the advantages that I did learn in school after the parts where we learned about disadvantages are here. So access to new markets, so you're able to expand from maybe a saturated market in the US. So for example, in my business, in fitness equipment, the US owns 70% of the market. That means that there's a ton of fitness businesses. It's a little bit fractured, but there's a lot of fitness equipment here in the US. But that also means that the US has the opportunity to lead that also internationally, right? So if the US owns most of it, they also get to work internationally because there's not as much competition from international partners or international people. It can be cost effective, so maybe you're getting your labor or your goods from somewhere else because they have maybe abundance, the supply and demand aspect of things. More creativity and innovation. Maybe they think about things differently. We thought we learned a little bit about the culture mapping, kind of how people think. So maybe that difference in thought can help your company. Global brand recognition. So also there's expats. So for example, if you're traveling to another country, if you are already international, maybe they want to also buy your product because they trust it and they're in a different space and they want something familiar. There's diversified workforce that is helpful with mitigating risk internationally. So you're able to, maybe if one workforce isn't as robust in one place, you're able to get some workforce other places. Then we also have financial gain, increasing business, job creation, goods and services. So there's a lot of benefits to international business as well. So another reason why it's so important and the benefits of it is because 52% of the world's GDP is international business. So that's a huge amount of the world's GDP and a lot of transactions going on. So here, just think about the parts of your businesses that are affected by international business. Maybe it's a labor force, maybe it's a good or a trade, or maybe it's your customer. So we think about the international market of the money, right? So the US dollar is really strong. Maybe you're able to go hire somebody else in a different country because we don't have enough workforce people here, and it's cheaper to go hire them in a different country. A lot of times there's a move towards even remote working from other places. So in our company, we actually have somebody who does our social media from the Philippines. So it makes it really interesting and cool. It's different, right? And you have to work with the time zones and different things like that. But you're able to be impacted by, in a good and maybe negative way, of international business. Okay, so the methods. So what are some practical things that you can do to kind of implement in your business to kind of think about maybe scaling globally or just positioning yourself in a way that you can go global in the future? Okay, so some of the methods when you're wanting to go international is exporting. So maybe that's working with the Department of Economic Development to go international. You have import fees, you have transactions there, but that's a a fast way to go in, low risk there. Then we have licensing and franchising. That's also a fast way to get in to international markets. That one you have to be a little bit more, it's a little bit more risk than the other one. So in international markets, they could take your IP, so your intellectual property. So if it's maybe a design aspect or some kind of, if it's really core to your business, maybe you need to think about how strong are their laws there? How strong is their regulation in that country? Next one is partnerships and strategic alliances. So if you want to partner with another company, sometimes you have to have joint ventures with another country. Sometimes they require it, like China. They used to require, and I think they believe they still do, but require you to have a joint partnership with somebody in that country. You can't always just go into another country. You have to think about the laws, regulations, and then the best strategy to get in there. Also having a partner in that local market. You're able to understand that culture maybe a little bit more. You're able to understand that local consumer better than if you just went in there from the outside. The next thing is acquisition. So you can acquire another business outside of your own company to expand your business. And so that's another option that you're able to do. You already have people and a system in place that know the culture, know the area, and the customers. And then you have the greenfield venture, and that's literally doing what you're doing in another country, and you're not just doing it, you're not just exporting it, you're going there. So you're establishing and setting up a whole nother company over there. Next we have the cage analysis, and I won't go through all of this because we don't have time, but cage analysis is just one way to kind of think about going international and things that you need to, like when you're picking the next country that you're wanting to go into, just some things to think about: the culture, the administrative aspect, the geographical, and the economic side of things. So what's really good is if you do it by percentage or by some kind of weighted value on, and then kind of going through those countries based on that. Next we have the pestle analysis, and that again takes another approach to analyzing what country you should go into, what's maybe not a good country to go into. So for us, we are going into Canada first because it's very closely similar to the US. They have a similar mindset, similar culture. It's not the same, but it's similar and it's geographically closer. We have big, large equipment, which means that it has to be driven there logistically, so it's easier for us to do that. And then kind of the current operation, so everything that you're doing currently in your business, you want to think about does it have the capacity to grow with you internationally? Does that system that you have, like Square, is that able to take on international transactions? Are they able to do currency conversions? So those are some things to think about. Maybe your website, is it user-friendly for other cultures? Because what they like isn't the same as what we're used to looking at. And then here's some local resources that are really helpful in the international space if you're looking at going international. I've personally worked with most of these here. There's actually the World Trade Center and the Department of Economic Development that will help small companies, well, really any company, go international. They will subsidize 50% up to a certain amount for you to do marketing, to travel to the other country. They'll do market research for you. So they're very helpful and encouraging and expanding international. Okay, so the last thing I wanted to talk about is just what are some things that you're willing to commit to today to expand your mindset to going global or to have that global mindset? So maybe it's subscribing to a news channel that's outside of the US. Maybe it's going to more events, cultural events. And then for any companies, thinking about how can you support international expansion from a local standpoint. Okay, and I'm open for questions now. Thank you. Yes.
This is a very valuable presentation. I wish that I had these sort of
Good.
I wonder what you think of, how do you find out, how does a young person or not so young person wanting to develop a global mindset, how do they find out what the situation might be in another country, whether it's Japan or Germany? How do they go about finding out, apart from looking on the internet and websites?
Yeah, so every country is going to have their, internet source, and I think that's really helpful from both a perspective of looking at their country, but also even looking back at our own country. So what is their perspective on the U.S., right? Like, it's going to be different than what the U.S. thinks about the U.S. So yeah, going to the other news sources from other countries, like the BBC, the British one. There's, if you're going to the French website or Australia websites, that's really helpful in understanding that economy and what's going on there. I would say, like, also if you have the opportunity to talk to other immigrants or other groups from different areas, that's really helpful, because not only can they talk maybe a little bit about the political environments or just what's going on, they're also able to talk on a personal level about the culture that they've experienced and kind of how they perceive things there, and then also compared to the U.S.
This is maybe picking up subscriptions to newspapers from other countries and get just more of a personal fix on
Yep.
what's going on. And the other thing I was thinking about before, when visiting a country, look for the differences
Definitely.
and don't ignore them, push them aside and say that's not important,
Right.
because they could be very important.
Yeah, and you're operating in a different culture, and it's the way, like, you're a visitor of that place. So take what you have with an open mind. So yeah, good points.
The World Trade Center is a great resource.
Yes.
They'll do tons of work on the ground for you.
Yes.
Where they will bring you partners.
They will literally introduce you to people, find your logistics, market research, everything.
Kind of blew my mind when I realized that was all available.
Yeah. Yeah, and they'll even give you money for going outside the country. So super helpful. Yes, ma'am.
First question is, how much of a barrier is not being bilingual or not speaking the language in the country that you want to?
Yeah,
How do you overcome that?
that's a great question. So luckily for us, English is the national the international business language. So most people speak English. I don't speak another language. So it's maybe it's easier to do if you know other languages, but it's definitely, I don't think, a huge hurdle. You can find translators a lot of times, and again, if they're working in international business, they most likely know how to speak English. Yeah.
Okay, and then my second question is specifically about manufacturing. So if I am looking for artisan, handcrafted manufacturing, I'm learning that it's more prevalent internationally, not, and it's kind of a lost art here in the United States. The resources that were on the slide before this, will any of those resources be able to guide me in the direction of finding manufactured, handcrafted, artisan?
Yes. Yeah, I would say the World Trade Center would be able to help with some of that or direct you to the right place. The Exporting Council as well, they probably know a number of places that they work with. Yeah, so I would reach out to one of those organizations and ask them if they can't help you, where it can help you. But I would say that those would be able to point you into the right direction, give you some information about, yeah, because I'm sure that other people have kind of looked into the similar things. So, yeah, you're welcome. Yes.
Would you have any specific guidance? Our product is a math stamp book, and
Okay.
We wanted to expand outside of those perimeters as well.
Okay, yeah. So it depends on your approach to things like materials or information like that. So if you want to just translate it where it's more of like one-to-one, like, you know, one word equals another word, or if it's more contextual, where it's not the same word, but for them it maybe they're able to understand it better. So it depends on like what your goal is or like what you wanted to do with that. I would say depending on what you want to do, maybe contextual is better because for them it's going to be easier. It's going to be how they process things. So again, going back to the culture map and understanding like how they think through things, maybe they don't have like a sense of timing like the U.S. does in its speech, and so maybe it's going to be conveyed differently. Yeah. But I would talk to a translator. They would definitely know like what would be the best solution for that. Okay. If you don't have any other questions, I will leave you with my contact information. I'll also be out in the lobby at the startup booth areas. So we'll also have a pull-up competition if you want to join us for that. So, and if you don't want to do pull-ups, you can also do plank. We also will have a plank challenge for the longest plank. So, okay, thank you for your time.